Hi, everyone. This is Sam Silverman. Thank you for taking time to join us on today's webinar. Today, we're going to be talking about source of funds best practices for Vietnamese nationals. And today, I'm joined by my partner, Mike Schoenfeld, and Bung Lee, who's going to be discussing some of the specifics for Vietnamese investors. During today's webinar, if you have any questions, please use the chat box on your screen to submit them, and we'll try and cover as many as we can at the end of the webinar. All right, let's move to the table of contents. So this is a short overview of what we're going to try to cover on today's webinar, starting with a little bit about the speakers, a little bit about EB-5 affiliate network. We're going to talk generally about source of funds and how does it fit together in the context of the overall EB-5 visa application process. We'll talk about some common source of funds issues and pitfalls that investors face, and specifically best practices for those investors who are going to have sources of funds that will derive from Vietnamese assets. And then we'll spend a little time walking through a specific case study and then open it up for questions at the end of the webinar. So again, any questions, please use the chat box, submit them, and we'll try and cover as many of those at the end of today's webinar. Next. So before we jump into the main content that we're going to cover today, we just want to share that we recently launched our new targeted employment area PEA map. You can instantly determine if a project site anywhere in the U.S. Or Puerto Rico covers or is in a targeted employment area and qualifies at the $900,000 investment amount, and you can enter your email and get a free complete report. So if you're looking to see if a project could work as a TEA, check out our map. It's completely free, and it's on eb5an.com. Another free helpful resource that a lot of our clients and investors reference is our guidebook. We just updated it in September 2020. It's also available for free at our site there, EB-5 Guidebook, or if you want a hard copy, you can get one at Amazon.com as well. Okay, great. Now we'll shift gears and give a quick introduction about EB-5 affiliate network. Next.
All right, great. So this is Mike Schoenfeld, also managing partner of the EB-5 affiliate network. On the slide is a little bit more of our backgrounds for both Sam and myself. And one thing that we think it's important to note is that we both come from more of a traditional finance and consulting background. We both worked together at the Boston Consulting Group, and then I was in private equity afterwards, and Sam was working in golf course and real estate development. And what we saw was an opportunity to come in and add some of this institutional knowledge to the EB-5 industry. And that's what we've done over the past 7 years.
Yep, that's right. Thank you for jumping in there, Mike.
If we move on to the next slide here. So a bit more about our company. So as I mentioned, we've been in business for about 7 years now. And what we are is one of the largest regional center operators. We own and operate 14 regional centers that cover over 20 states. And through those, we've sponsored almost $1 billion of EB-5 capital with over $4 billion of total development cost on projects that have been sponsored. And we've managed to maintain 100% approval on all projects that have applied through our regional centers. Next slide, please. This map highlights the regional center geographic coverage that we have. So we own 14 regional centers that each cover an entire state or multiple states. And if you look at the map, you can see we cover a vast majority of the major metro areas and both coasts of the United States with our regional center network.
And this map basically means that any project site located in those areas is a project that we can sponsor, regardless of industry type or asset class.
And that's a great point. So for those that aren't as familiar, an EB-5 project needs to be sponsored by a regional center if you're going to count indirect and induced jobs. And a vast majority, over 95% of EB-5 investors do choose to go through regional center sponsored projects. And we are able to sponsor projects with these regional centers. On this slide, we highlight one of the things that I think is most important about our company. We have investors that we've sponsored and that have invested in EB-5 projects from over 60 different countries. And we think that that highlights that investors from all across the world with different values always find a lot of value in the approach that EB-5 puts into structuring the projects that we have sponsored. And now we'll turn it over to our special guest panelist for today, and he can provide you some of his background and experience.
Thank you, Sam. Thank you, Mike. This is Fung Lei. I've known Sam and Mike and the EB-5 Affiliate Network team for a number of years, so it's good to join them on this webinar today. A little bit about my background. I have been an attorney for well over 13 years, almost all of that specifically in EB-5. So we've helped thousands of investors from around the world, including hundreds of families from Vietnam. So for me, I've represented all parties in the whole entire EB-5 lifecycle, regional centers, developers, migration agents, and investors as well. So typically we do quite a bit of project work, but obviously the investor side is quite important as well. So next slide, please. So as you can tell, we travel, write, and lecture quite a bit, just like the tagline says. Those of you familiar in the industry have probably seen me or my colleagues speaking at seminars or through our articles or through our various presentations. So in the last few years, I've been in Vietnam quite a bit. And so I've had quite a bit of experience working with investors and the various sorts of funds issues they run into. And hopefully we'll share some of that today. Next slide, please.
Great. So I'll cover a little bit about the background of source of funds and some of the most common strategies used for it, but we won't go too in depth because in the second half of the presentation, we'll start talking about those areas and specifically for investors from Vietnam. So the first thing to think about with the source of funds is what is it and why is it important? So when an investor is going through the EB-5 process, and submitting their individual I-526 petition, there's two portions of that petition. The first portion is about the project. All of the details on how the project is going to create the jobs, how the capital is going to be invested, the NCE, the JCE, all of the meat of the EB-5 application on the project side comes into this portion of the application. But the second piece of the application is specific to the individual investor. And on this side, a large part of the focus is on the source of funds. So now at $900,000, you have to legally show where all of the funds have come from in making the investment. Next slide, please. Next slide. It's great. So when documenting the source of funds, there are four main categories that we see across all different investor groups, and quite often it's a combination of the four of these. First is ordinary income. So if you're in a country where it's easy to show your tax records, such as your W-2, then you're able to show your ordinary income. Next, the next most common one is capital gains. So if you bought a condominium unit for $200,000 and later sold it for $1 million 15 years later, you're able to use that gain as part of your source of funds. Next is a gift or inheritance from the family. So gifts and inheritances are allowed to be used, but you do also have to show where those funds originally came from. And fourth, and this is becoming more common, are loans. Historically, you would need this loan to be secured by an asset that you had as an investor, but there are changing regulations now, and we can get more into that later on unsecured loans and other loan structures that could potentially work. So just generally, when you're thinking about the EB-5 investment source of funds, you're able to use any lawfully obtained source of funds, but you do need to be able to show the documentation of how that money was earned. And then also, especially for Vietnam, there are some transfer restrictions. So you also have to be able to show how money was transferred out. And on the next slide, we'll very quickly touch on this, and we won't go too in depth because that's going to be in the next section. So when we're thinking about ordinary income, this is, as I mentioned, the money earned by the investor, a spouse, and it's shown through any official documentation from the company or from the government taxation side, showing where the ordinary income came from. On the next slide, we'll cover capital gains. So with capital gains, this, as I mentioned before, could be real estate, but quite often this is also stock investments, business growth, and the sale of a business. Anything that under U.S. taxation you would think of as a capital gain could qualify for this category. And this is a very common method that investors use to show their source of funds. One thing to note here is you do need to work all the way back to the beginning. So if we go back to the example of buying a condominium for $200,000 and selling it for $1 million, you need to show how you originally earned the money to be able to buy the asset. So it's not as simple as saying I made $1 million on a home sale. You actually have to back all the way to where the funds were acquired to purchase that home in the first place.
This is Phu, and I'm glad Mike brought this up because this is probably the most common method that Vietnamese investors use to fund their EB-5 investments. And we'll go into it later on, but it's exactly like you mentioned. You might have a lot of money now, but you usually have to explain how you got the money to purchase your first piece of property or first piece of land. So that's going to be a key issue that a lot of investors face.
Exactly. And in the next section for gifts from family members and friends, most often it's going to be from a family member because if it is truly a gift, there should not be the expectation of a repayment. And not many people have that good of friends that are going to gift them $900,000 or a portion of it just because. So quite often this is going to be from a family member that is gifting the money. And as you can see on the slide, some of the things that you will need is the backup behind that gift from the family members or the friends and how they actually obtain those funds, what your relationship is. And the government is, of course, going to dig in a little bit if $1 million just magically shows up in your account from a random person that is not a family member. They may really dig into that. So you have to have a lot of evidence here for how that part works. And then the last method, which is gaining in popularity, are loans from third parties. And as I mentioned before, typically loans will need to be at market terms against an asset of some kind. So if you have a home in California worth $2 million, you could probably get a loan against that for $1 million and use that to be able to fund your investment. But it does get a little bit messier if the property is owned overseas or if it's very hard to establish the valuation. And that's something else that we'll get into Vietnam specifically in the later sections. And I think at this point, I'll turn it over because the source of funds is very country specific. And now we'll dive into all of these categories and how it looks in Vietnam and for Vietnamese nationals and the specific pitfalls and nuances that you really need to think about as you go through the process.
Okay, Mike. Well, thank you for that great overview. And it's funny because it's true, because no matter where you come from in the world, typically almost all investors fall into one of these four categories. Now, like Mike mentioned, investors from certain countries tend to have very similar fact patterns. So over time, you see a lot of investors tend to fund their investments from very certain categories. Now, of these four, what you're going to find out that a lot of Vietnamese investors are going to be the way they fund investments is from the sale of real estate or from the sale of property. Land speculation in Vietnam is very popular, but we'll go through this one by one. Okay? So the first part is in terms of ordinary income. Next slide, please. Okay, so for Vietnam, there are people who are able to fund their EB-5 investments from their own business. By and large, it's very rare to find someone who works for a company, has scrimped and saved and has accumulated their salary and savings over a number of years. The people who use business income are usually going to be people who either are entrepreneurs, have run their own businesses, and if depending on how you are, if you are a recent company with say undistributed profit, then you're probably going to get a shareholder loan from your company itself. Another situation that we see that's actually pretty common is a lot of people in Vietnam are just entrepreneurs. They actually start very small. It could be what's known as a household business, where literally you have like a 2-3 story building and then you just use the first floor as a storefront. So we've had investors who sell textiles, who sell incense, and they essentially accumulate that money over time. And a lot of that's really like cash based. So by and large, it's going to be the self-employed entrepreneur that if they do use this category, they're going to use that. They're going to use their own business to fund their EB-5 investments. However, there's quite a bit of paperwork involved, as you can imagine, and it's a very cash-based economy. Not everyone has 20, 30 years of handwritten receipts, so you can use this, but by and large, it's not the most optimal method of funding your EB-5 investments. Okay, so to the extent possible, this is not preferred method, but it does work. Next slide, please. Okay, so capital gains, but in plain English, or for Vietnam in particular, what really happens for most people who have accumulated wealth in Vietnam, real estate is by far the most common one. The common fact pattern is this: most people who have used real estate, be it a property, a condo, or a building they bought long ago, or it could have just been land, what we see over and over again is they bought something before 2003, right? And after 2003, there seemed to be some sort of economic boom where the property values just exploded exponentially. It's by far the most common method, and I think so. The way it works, the reason why it works is this: like Mike said, when later on, if you are selling your property or you're taking a loan for your property, and you're saying it's worth $1 million, that's pretty straightforward. That part is pretty easy. Typically, you're going to have the bank come in, you're going to have their own appraisal and third-party report, and then it's not hard to prove the value of, say, your property when you're getting a loan and when you're selling it in today's world. The reason why this is preferred because it goes all the way to the beginning as well. In a very cash-based economy, most people have bought property with a very low amount of money. So it's not hard for them to show that. It's hard for you to show that you have $300,000, but it's not hard for you to prove the source of funds for, say, $20,000, and later on it exploded to like $500,000, $1 million. So that's the reason why this is very common. Next slide. So gifts for inheritance for family and friends. This is also very common. And when we say gifts or inheritance, usually it's going to be a combination of things. So for investors who are minors or investors who are, going to school, going to the US through EB-5, really for college or begin their careers. I mean, not many 18-year-olds or 17-year-olds have $1 million in the bank. So what's going to happen is you have a parent or maybe a grandparent or an aunt or uncle who is going to gift you that money, either through, it's going to be through property, or they're going to sell some property they have and they're going to gift it to you in cash for you to complete your EB-5 investment. When that happens, you really have a dual source of funds. It's not really the investor you're focused on. It's the giftor, be it the parent or the relative. So whoever is gifting the funds has to be comfortable with providing evidence of where they accumulate like that money from, how did they buy the property, and the records from back then. Next slide. So documenting loans for third parties. And this, although Mike mentioned before that you could use unsecured loans, it actually pops up in both contexts for whether you're using a loan secured by, say, your land or your condo or your house, or you're using cash proceeds just from a credit line, right? It all goes back to the credibility of the lender. So it's very unlikely that if someone like, say, Bank of America or HSBC gave you the loan, then it's easier to explain. There aren't as many questions about where the HSBC get their money from. They're a worldwide bank. So chances are they'll be able to show how they underwritten your loan. Why do you have such a huge line of credit? And it will make more sense. But it's very common for these informal transactions where maybe a family friend has a company, right? A company who's willing to give you, say, a loan or unsecured loan. In those kind of situations, we usually want a declaration from whoever the lender is explaining, like, why would you willing to give this particular investor this loan for them to fund the investment? And more importantly, where did this essentially get you a source of funds for who the lender is? You had to give a little bit of background about, say, if you're using, say, a company, we will probably want your business registration, a couple of years of financial reporting to show how you accumulated that money in order to fund that loan, and actually the loan agreement itself. So if you are going to get an unsecured loan, it sounds great in theory, but you have to be able to provide documentation from who the third party lender is as well.
And so I guess amongst all four of these sources of funds, what would you say is the absolute most common method from Vietnam? And what would you say is the one that people think they can use, but ends up being a bad idea because of the documentation?
It's definitely real estate. It's definitely real estate. Because the thing is, for just the way Vietnam is, like, they didn't really have a record keeping system or tax keeping system until relatively recently. For example, like before 2009, you didn't even have to pay personal income tax. So part of it is like we're working with USCIS for each of these countries, and it's through no fault of their own. So when you are putting together a petition, part of it is you have to be able to educate USCIS or adjudicator who might have no background on a country's, tax and financial record keeping systems, and have them help them understand like why something is the way it is. So we're now with really very cash-based economy where even the local tax collection wasn't really like systematic until much more recently. To use real estate where you were able to purchase for a relatively low amount of money, say 10,000 or 20,000. So Mike, in a situation where you have someone who is just running a simple household business and they're selling textiles, maybe they're doing gold trading, they can probably, put together enough records from, say, the customers through declarations or pictures or, purchase orders to kind of show that, they were able to earn $10,000 or $20,000. And then later on when they sell it, that story is completed pretty easily because the bank or whoever's underwriting the loan or whoever they're purchasing from, they could probably get an appraisal report. The one that's more difficult is either business income or even sometimes the loans from the third parties. And the reason why is it all goes down to, it's fine for you to provide your own records, but sometimes when you try to get records from other parties, such as like there might be a company that's willing to give you a loan based on your relationship, but they might not necessarily want to give you the business registration. Or, if you ask them for financial records, they probably don't want to do that a lot of times. So that's why we always sit down with people and we think of different possible options for them, and then we focus on one.
Got it. That makes a lot of sense.
Yeah.
And let's move on to the next slide, because I think this is probably one of the other most discussed topics, especially coming from Vietnam with currency controls. Can you walk through the typical path of funds and what the restrictions are in Vietnam and how some strategies are being utilized to move money?
Sure, Mike. And I think you can't really discuss source of funds in today's world for Vietnam and China for that matter without discussing path of funds. So this is probably, and I think it's well understood now, that this is probably the most heavily audited or heavily RFI'd issue that we've seen across the board in the last few years. So it used to be that when we were putting together an I-526 petition, as Mike laid out in the beginning, there were really only two issues that UCS was typically, focused on. They want to know what project you're investing in, essentially, where is this going to be built? Does it have enough money to be completed? And, will there be sufficient jobs? And then they typically move on to the investor's source of funds and try to figure out, like, did you, prove that you had enough money to fund your EB-5 investment? But now there's a third leg of that journey now, which is the path of funds. From what we've seen in the last few years, USCS has taken a heavy interest or heavy focus on how did these investors from these countries transfer their money to the US, and basically, was it even legal to begin with? Part of that we think is a little bit overbroad, overstepping, but that's the reality of today's situation. This issue pops up the most with both investors from China and Vietnam for one simple reason, and that's currency controls, right? So for Vietnam, it's well understood that you might be able to prove your $900,000 or your $1.8 million, and for the most part, I think most investors are able to do that, or the migration agents can help them do that. But then there comes the part of you transferring money out. Now, to transfer money out of Vietnam typically is very difficult, as anyone who's tried to do it will tell you. You typically have to get a permit. So if you're trying to transfer an outgoing transfer to invest for EB-5, you probably have to go to the government to request a permit specifically for that purpose. It's going to get mired in red tape. There might be a big application fee, and at the end of the day, it might just get lost in limbo. So because of that, it's common for, say, a secondary market to pop up for people to step in and help investors transfer their money. So for UCS, what they're asking essentially is, how did you, after you got all this money, how did you transfer your money from Vietnam to the US? Okay. From a legal standpoint, all that you've ever had to do, all you've ever had to prove throughout the years is simply ownership of funds. When you look at matter of Zumi, which is the case of controls here, all that UCS has really asked for in the past is, like, when you are transferring your money from your country to the US, can we follow this particular chain from A to B to C to G? That's the way it was for a number of years, and that's the way it's worked, and that's the way it makes sense, because really the investors should only have to prove their particular source of funds. What we're seeing now is, because over the last few years, like really since EB-5 started, the most common ways for investors in Vietnam to transfer the money to US is to go through, say, they find an overseas company with equivalent US money to help them swap funds and transfer to US, or they find a currency exchange company, kind of like a Forex company, to help them transfer their money. So now what UCS is going after is, so we understand you invest in Vietnam, that we understand where you got your money from, but we don't understand what this third party is doing, or whether it was even legal. So what we see is, for example, with import-export companies, it's very common that Vietnam kind of is a hub of like how it connects business. You have import-export companies in Singapore, in Hong Kong, and in other countries who will have US dollars earned from their normal business rate. And they might have a representative in Vietnam. They might have a branch in Vietnam where the investor can come over there, essentially hand their money in Vietnamese money to the representative in Vietnam. And then say the export company overseas will transfer the equivalent money in US dollars to the entity's account in the US. What we're seeing UCS demand is they want to essentially do a source of funds for, say, the import-export company. They'll ask, well, when was this company registered? Is it legally allowed to transfer USD as part of its business practices? And also, it goes a step further and usually asks for, so this $500,000 or $1 million that you have in the bank, we want to see where you're earning from, right? So these import-export companies or any really third-party company overseas that's conducting these swaps, we're seeing UCS request that they provide customer contracts, invoices, bank statements. So essentially, it's almost like we have to conduct a source of funds for the import-export company as well. So that's an issue that we see popping up over and over again. A similar situation pops up with currency exchanges. These can be a little bit more straightforward. When I say currency exchange, maybe a better way of looking at it is it's almost like if you were able to find the equivalent of Western Union, who would be able to help the investors transfer their money, right? You have these companies overseas in Hong Kong, in Australia, who buy, sell, trade currencies, or they're basically Forex traders. So for those particular companies, if you have a business registration that specifically allows you to transfer currencies, UCS has been willing to accept that. Now, all three of these particular methods, UCS has approved. It's just that their sophistication, the amount of detail that they're asking for, has constantly evolved over the last 3 or 4 or 5 years. So this is something that we advise investors that they have to be well prepared for in order to transfer their funds. And as part of the EB-5 process, I think it's something that you can't overlook at all.
And so, Fung, one common question that comes up, given that context, is, for an investor who's filing now, given that USCIS has become a lot more sophisticated, what's the best practice? Is it, that, you basically advise the investor, listen, in this initial application, we need to include all those source of funds documents, bank statements, registrations, et cetera, for that intermediary company as part of the initial I-526 filing, or at least, make sure that that company is willing to, provide that document in the future if we need it. And then I'm sure, there's probably hundreds of different transfer companies. Obviously some are willing to provide those materials, others are not. How do you make sure that, a new investor coming in now, goes with a company that either is going to give you the records you need now, or, is willing to comply in the future if it comes up?
That's a great question, Sam, and you've hit the issue squarely on the head, right? So part of it is what we find really difficult and completely unfair to every single investor in the last few years, right? It's a different issue if you're filing today, and we can properly advise you. But by and large, these investors who filed the I-526 petitions have complied with the rules that existed at the time they filed, right? So whatever the rules, whatever the requirements were at the time they filed, that's what they prepared the petition based on. Now what's been happening is, as you can imagine, if you find initially an import-export company or an overseas company that was willing to simply swap your Vietnamese money with their USD, and that's been accepted in the past, you can imagine their reluctance or hesitation to provide, evidence of their own business documents, about evidence about their customers, invoices, contracts, trade secrets. It makes it very difficult because even when the investor asks for them, a lot of times, sometimes they'll be willing to comply, but there have been situations where these companies outright refuse to, and it's only the investor that gets harmed in those situations. Now, nowadays, I think as part of the consultation process, it's nice if you can hold people to promises that they're willing to provide whatever you request them in the future. But I think we all know that that's not really the case. So when we prepare I-526 petitions nowadays, if we don't have the sufficient evidence to establish path of funds, we basically advise the investor that you need to find another transfer process because this is a huge red flag or a huge back-end liability for you. And it is possible. It is possible. So in terms of best practices, an issue that we hadn't even discussed here that's on this diagram is number 4. So there are various methods, but probably the most efficient, cheapest, and safest way is, look, if you have a family or friend that has an account in the US and has an account in Vietnam, and let's say they have a green card or they have a US citizenship in Vietnam, you can go ahead and engage their help in order to essentially transfer the funds from Vietnam to the US on your behalf. We won't really get into details there, but you're allowed to do that. So for example, if I had an account in the US and had an account in Vietnam, like I'm allowed to transfer money from my account in Vietnam to the US. So that's something that's legal. There's some record keeping that you have to put together, but it is a possible process. Another way is if you find a registered currency exchange that is legally authorized to accept outgoing transfers from Vietnam, right? And swap that money and transfer the money to the US, you can do that as well. The reason why those currency exchanges weren't used in the past is, by and large, their transfer fees are a little bit higher than what investors are willing to pay for. But as it is right now, unless you can find an alternative method, it might be something that's just the cost of investing that you just kind of have to bake in as part of the process, right? So I would advise that unless you can get those documents beforehand, the path of funds documents, run it by immigration counsel and get their sign off. I think it's too risky to file now and hope for later. You need to have that ready to go before you file.
Got it. Okay, that makes sense. We can keep going through the slides. Thank you, Feng.
Sure.
So this slide that we're going to walk through now, this is a more complicated structure, and we chose this one to discuss because it kind of illustrates a number of different aspects of the topics that we've covered on today's webinar. So in general, before we dive into the specifics on this chart, what we're trying to illustrate here is that an investor overseas in Vietnam has a friend in the United States, and that friend has a consulting company that's generating income, and it's generating, if we look at number kind of above 5 and 7 on the right side, it's generating about 300,000 in after-tax income, and it's done that for the last 5 years. It's about $1.5 million in profit. And this friend in the U.S. has decided to help out his Vietnamese friend by making a loan. And it turns out that the investor in Vietnam has a real estate asset over in Vietnam, a multifamily apartment building, and is willing to, provide a mortgage on that building in exchange for this loan of $900,000, right? And so, in this case, because the loan here is being made by an individual, by this individual's company proceeds that were earned, there's going to be additional source of funds documentation that's needed to substantiate that business owner who's lending the money earned those funds legally, right? It's not like the funds are coming from a major bank like a Wells Fargo. They're coming from a small business, and so you've got to prove that small business earned the funds legally, right? And so, looking at 5 and 7 on the right side there, you're going to have to provide all the documentation associated with the operation of that business. So EIN number, operating agreement, registration, all of that. And then on 7, all the bank statements showing that, that income was actually generated from arm's length services that were provided, and, payments were made for those services from third parties to that company, and the appropriate annual tax filings were made and taxes were paid. And so the money that's now being loaned is actually truly after tax legitimate income, for services that were performed properly. And then looking up at number 6, who is the lender, right? In this case, it's an individual through income earned from this business. So, passport, social security, information on that individual person. Then on number 4, as Fung mentioned earlier, we want to make sure that any loan transaction is going to be a market rate transaction, right? So you can't do a 50-year loan at 0.1% interest, right? It's going to be probably a 5 to 10-year loan, and it's got to be at a market rate interest rate that's going to make sense. And most importantly, the asset that the money is being loaned against has to be worth less than the amount of the loan. In this case, let's say it's 900,000. So you'd want to have, number 2 there on the left, some current documentation from a third party confirming that, that piece of real estate is actually worth at least $900,000. Otherwise, no lender is going to loan money on something that's worth less, than the collateral is, right? So that's kind of the 2 major parts happening on the loan side of the transaction. Then, all of the documents that Fung mentioned earlier, how did this investor acquire this piece of real estate to begin with? Obviously, it's gone up in value, since they've owned it, but where's the seed capital? Where did they get the money to buy this or develop this property originally, right? And so you're going to have to show, income or assets of around the initial purchase time, whatever the initial purchase value was, and how the investor got that capital to buy the building, or if they inherited it, how they inherited it. How did they start? How did they get it to begin with? That's also going to have to be illustrated, right? So it's, in general, with these source of funds structures, this is a structure we've seen several times. The good thing about this structure is you avoid having any currency control issue, because it's U.S. dollars being, loaned, and that money doesn't need to be converted, and it's already in the U.S. because the lender's in the U.S. So, you can avoid, and there are some banks in the U.S. today that will open an account for an investor sight unseen. And so that money could just go directly into a new account that could be opened remotely, and then from that personal account directly into the new commercial enterprise of the project. So, that's the good news about a structure like this. The bad news is that, you've got to have all the documentation associated with the lender, because it's not a traditional bank that's making the loan. And you also have to show all of the sourcing documents for the asset, in this case, the piece of real estate, as well. And so those are kind of the 2 major sets of documents or work, that's going to need to be shown. But I'll let Fung jump in. Is there anything else you think specifically for, a Vietnamese investor or a Vietnamese, based asset that, you'd want to also, include or mention for this?
Yeah, it's funny because this does work, but you also, like Sam mentioned, you need a very good friend to do this, right? So the documents you are using, numbers 5, 6, 7, to give a little bit of background on your friend's consulting business, are the same sort of documents that you would have to provide if you were to use, say, a third party an import-export company overseas, or any company overseas who's giving you a loan or completing a currency swap for you. Basically, I mean, if you look at it from UCS standpoint, you just want to know, is this a real business? What did they do and how did they earn the money? So that's always going to be analysis. In terms of number 4, the loan agreement, the rights to foreclose on it, and everything else are important. A few other things I would note here is also, given how long USCIS takes to adjudicate 526 petitions now, the investor should also be able to show that if you are getting a loan to fund your EB-5 investment, if it's a 5-year loan, and hopefully it doesn't take this long, but it's not uncommon for USCIS to come back later on and ask for proof that you paid off the loan already. So that should be something that you also are able or prepared to show evidence of in the future. Also, for a loan agreement that you're taking out on, there should be no restrictions, and this is something that used to pop up in the past. If you're getting a loan in order to fund your EB-5 investment, please make sure that loan agreement also says that there's no restrictions on using it for investments or securities, because we have seen that in the past, right? You can imagine, for example, you take out, say, a home equity line of credit, and the bank is cool with you using that money to renovate your bathroom. but they might not allow you to use that for, say, day trading. So be very careful about that.
Got it. Yep. That makes sense. Let's move on to the next slide. So one thing that we've put together here to help kind of illustrate how the process mechanically works. Once the investor has worked with their immigration counsel to help outline exactly how they're going to show the source of funds, whether it's inheritance, gift, income, capital gain, multiple sources, one source, all of those records and documents need to be organized and presented to USCIS in a logical form, right? And so each investor files a cover letter that explains the project that they're investing in and how that project meets EB-5 rules and requirements as kind of the first half of the letter. The second half of the letter explains how that individual investor's money has been sourced correctly, lawfully, and how it ended up from the investor's assets and personal accounts into the project. And so this is kind of a short template letter that we've put together to help kind of illustrate how that section of the letter could look and what types of documents are going to be needed and referenced and included in the application package with USCIS. So it's kind of tell the story of how you got the money and how the money's moved from one account to the other, and then include all of the documents that kind of substantiate what story you're telling of how that money arrived into the project, as it is today. Next slide. Yep. Yeah. So this is a more detailed list of what some of those exhibits could look like, right? And this is going to be highly variable, per investor. So, some investors just inherited all the money. That's only going to require inheritance-related documents. Other investors had a business or, had a piece of real estate that went up in value and took a loan or sold it, or they had a stock portfolio. So this is going to be very, very variable. But just to give you an idea, this list of exhibits can get quite long. And so it's really important to work with competent and experienced immigration counsel to make sure that you're not missing any of the exhibits that you're going to need. And again, all of these are also going to have to be in English. If they're not already in English, they would have to be translated as well. And keep in mind that if you miss one or two of these, it's just going to delay the process. The USCIS would issue a request for evidence, RFE, and then you'd have a few months to respond to that. They would ask, for whatever documents they thought they needed. You'd have a few months to track those documents down, get them translated and respond, and then hope that they were accepted or, another round of questions or a denial if, you were unable to provide them or they were insufficient. All right. So it can be really important is really important to try to make sure you get it right the first time. Because if you don't, then it's definitely going to be a delay of at least months. And that's just months of time you're not going to be able to get to the U.S. and, also probably result in increased scrutiny on any newly submitted documents that, should have been submitted the first time. Next slide. So we're going to spend a few minutes talking about two current EB-5 projects that we have available, and I'll let Mike jump in and share a little bit about these two projects. And a number of our investors have invested from Vietnam over the years in these projects and with Coulter. So I'll let Mike jump in and explain a little bit about them and about the developer, the Coulter Group.
Sure. So this is a high-level summary of one of the projects that we're currently working on. If you're interested in investing, please reach out, and we can ensure that you are an accredited investor and get you the proper materials to be able to evaluate the investment. But this deal is called the Hyatt Fort Lauderdale. It's phase 2 of a prior EB-5 project that we did. In this project, the EB-5 investors are earning a 2% preferred return, and there's a total of 18.9 million of EB-5 coming in phase 2. It's a project, it's a high-rise tower in Fort Lauderdale, Florida, with a hotel component on the bottom, a Hyatt-centric hotel, and then a condominium portion on top with many high-end residences. This project is actually nearly complete in terms of construction. The hotel is already open and operational, and the developer is working through the units, the condominium units on the top, and doing the final punch out. There's several unique features about this, including an I-526 approval guarantee, and there's plenty of jobs that have already been created for every investor. So if you would like more information about this one, please reach out. And this project is being developed by the Coulter Group. It's a large real estate developer, primarily focused on the southeast of the United States. They've been in business for over 20 years, have done well over $10 billion of development, and are one of the largest private developers in the country. The next project is a little bit different and has a little different flavor. It's not a debt style project, which the Hyatt Fort Lauderdale was and is the most common structure. Instead, the Saltaire St. Petersburg project is actually an equity project where investors are coming into the equity portion of the capital stack. It does earn a higher preferred return at 6% because of that. And this project is nearly sold out at this time. There's another high-end luxury condominium development in St. Petersburg, Florida. And this also is the second phase of an existing project where there was a building in St. Petersburg right down the street that we did structure for EB-5. It's completed. All of the units were fully sold out. And because of that, the developer chose to build this project 3 blocks away. And pre-sales are going extremely well. And we're very excited about how the project is progressing. So both of these projects, you can reach out to us to learn more information. They're both already structured. This project has an exemplar approval on it. In the Hyatt Fort Lauderdale project, EB-5 investors in phase 1 already have their I-526s approved. So it's a very well-structured project to take a look at. And I think with that, we can go to some of the questions that we received. So Jeremy, I'm not sure if you can go through the chat box and see if we had any questions from any of the participants. So one question that I saw is, so when an investor is thinking about their source of funds, what's the first step that they should do? And I personally think that once you're starting to go through that process of really thinking about the source of funds, you should be reaching out to a qualified immigration attorney that can help walk you through what the best strategy would be based on your own individual situation. This is a very complex process, as I'm sure you've noticed throughout the webinar today. And it is something that you're likely only going to go through once. So it's worth leaning on a very capable immigration attorney to help with the structuring of that.
Hi, Mike. Okay, sorry, I froze up there for a second. All right, one question we have here is for a loan transaction, at what point of the immigration process can the investor safely terminate the loan? Can it happen prior to I-526 approval?
I mean, it's a fact-based situation.
That's a great question. I think Feng should take that one.
I mean, unless you want to answer it, I'll answer it, Mike.
No, I'll pass that one over to you.
Yeah, no, that's a good question, but there's always variations of this question, right? How long does it keep this loan for? What terms and everything else? Is it okay if it comes from a family friend? A point that Sam brought up earlier is what I would keep in mind here. It has to be a real market transaction. It has to be a real loan, right? So the thing is, if you want to get a loan term for 2, 4, or 5 years and everything else, you can go ahead and do that. But you also have to be prepared that later on, if USCIS comes back and goes like, hey, look, you have this loan for 2 years. I understand your good family friend gave you this 2-year loan, maybe at very low interest, but that only makes sense if maybe you paid it off already. So did you pay it off? So it's not really a matter of did you terminate your loan at the 526 stage, at the 829 stage? It's more like if they come back later on and ask for proof that, like, look, how did the loan mature? Was this resolved? Was there some sort of payout? You better prepare to submit evidence of however it was resolved, right? If you paid it off, you paid it off. But if what happened was all of a sudden your generous lender decided to rip up the loan contract, well, that looks a little weird, right? So, I mean, I think you understand what I mean here.
Yep. And to add to that, to get a little more specific, in a lot of these loan situations with friends, it's more common to see, okay, I want to loan you the money, or I guess backing up, usually the more common situation we see is, listen, I really like you, but I don't want to just gift you the money, right? Like, I like you a lot, but I'm not willing to just gift you $900,000. But what I'm willing to do is I'm willing to loan it to you, at a market rate, and set it up in a way where you're going to kind of repay me eventually, once you get the money back from your EB-5 investment, right? That's kind of the more common situation. And so in that type of a situation, you want to work with the appropriate legal counsel to make sure that the loan term, is it a 5-year loan? Is it a 6-year loan? Does the loan have any extensions? What's the interest rate on the loan? You can do an interest only loan, where the payments accrue, right? Where you don't have all those payments being made, every single year, right? And then you just have to report that implied, interest on your tax return, as income. But there's a number of different, considerations to think about in the loan type scenario. So you really want to make sure you get good legal counsel, before you have, your friend or family member, or even a business loan, is made, to make sure you've got the right documents and the right flexibility in place. Because as Fung mentioned, these current processing times are years out. And so, you don't want to have them come back and say, well, this should have happened based on the original loan, and then it didn't. And then now you're not even going to get approved, because it doesn't smell right, at the time they're actually adjudicating it. Next question, Jeremy.
Yeah.
Okay, one more question here. If the investor terminates early prior to I-526 approval and repays the loan, does the investor have to prove the source of funds that they used to repay the loan? Does the investor need to be prepared for such documents?
Fung, I'll let you jump in on that one.
Can you repeat the question? I missed the first part.
Sure. The question is, if the investor terminates early terminates the loan early prior to I-526 approval, repays the loan, does the investor have to prove the source of the funds that they used to repay the loan? Does the investor need to be prepared for such documents?
I mean, you typically do, because part of it is like, where did this chunk of cash come from, right? I mean, whenever you do things, if you're going to hear stories about like, well, why did I have to do that? Because XYZ did the same thing over there and they didn't have to do it. But the thing is, these are not crazy questions for USCIS to come back and be like, okay, well, like, look, you had this obligation, in order for you to finish your EB-5 loan. When you say terminate, what you're really probably saying is paying off, right? Or an early buyout. But what they're going to say is like, well, like, look, where did you get the money in order to like pay this off? Was it a generous family member, or did you have some other bucket of cash that we hadn't discussed before? That's why when we go through these like source of funds analysis, like Mike and Sam are saying, part of it is if you use a loan, we will also look through actually the loan agreement and tell you like, look, this is a terminal loan, like what they're saying. This is how flexible it is. If for a lot of these like loans, if we anticipate that it's gonna mature before your 526 is adjudicated, we'll also tell you you should be prepared to send us evidence about how you're going to pay it off, because it's pretty likely that UCS will ask you. So I would say that you should be prepared to have the evidence available, and your counsel should have told you too.
Yep. Thank you, Feng. All right. I think that pretty much covers it. If there were any questions that we didn't get to, please reach out to us. The contact information for both EB-5AN and for Feng should be on the screen. If not, Jeremy will advance and we'll have that up in a second. And yeah, the most important thing is, there are ways to navigate this. It may not be very clear at the start how an investor's source of funds documentation is going to look, but once you've engaged competent legal counsel who's familiar with a lot of these issues that occur in Vietnam for investors from Vietnam, it'll be much easier to determine what the best strategy is going to be based on that investor's particular assets and records that are available, friends that may be able to help. Once you kind of see the full picture, then it's much easier to determine which is going to be the path of least resistance to be able to document the source of funds for that particular client. And one other point I forgot to mention earlier is that this documentation for source of funds is only required with respect to the capital investment, to the $900,000. It's not required for payment of any administrative fee that's separate from the minimum capital investment. So that's important, to keep in mind as well as you're going through the process. So thank you, Feng, for joining us. And a video recording of this webinar will be on our YouTube channel next week. And if anyone is interested in getting the slides that we covered on today's webinar, just shoot us an email at info@eb5an.com, and we're happy to send a copy of the slides as well. And please reach out to Feng with any immigration-related questions and any questions about either of the two projects that we covered today, the Hyatt Fort Lauderdale or the Saltaire Equity Project. Please reach out to us, and we'll be happy to discuss those with you if you're a qualified investor. So thank you again for joining us, and we appreciate your time.
Thanks, everyone.
Thank you, Sam. Thank you, everybody.
Yep.